Hey traders, it's John Fortune here with this week's weekly Forex Forecast. I hope you're having a fantastic weekend. We're going to build out our Forex trading plan as we always do by having a quick review of the key events heading into next week. We're then going to look at the scorecards for the currencies before matching them up with the individual currencies in the futures markets. And then we're going to move on to the currency pairs themselves, looking at the best pairs heading into next week before finishing with stocks, gold, silver and Bitcoin. So with that said, let's get into today's video. And if we look at the key events from last week very quickly, we don't need to pay attention to all this data. The two key things to take away from last week were the interest rate decision out of Canada and the interest rate decision out of the US. The interest rate decision out of Canada meant that the BOC kept interest rates at 0.25%. They have inflation heading towards 5%. And so this is actually fairly bearish for the Canadian dollar because they have delayed rate hikes at least for another month or so. So although interest rates remain unchanged because they're at such low levels, you could consider this a fairly bearish outcome for the CAD last week. And if we look at the US interest rate decision last Wednesday, the Fed really just doubled down on its hawkish stance. As a result of that, we saw the dollar rallying. And that dollar strength that we got from the Fed meeting last week is going to play a big part of the Forex trading plan this week. If we jump ahead to the upcoming week, you can see we have an interest rate decision coming out of Australia. So I do like Aussie to the downside once again this week. However, this will be from Tuesday onwards because between Monday and Tuesday morning, the Aussie pairs are likely to do nothing. We'll talk about that a bit more when we look at the charts. And we also have coming up next week an interest rate decision out of the UK on Thursday, so likely to bring some volatility into the markets, and also an interest rate decision out of Europe on Thursday as well. So we have 3 interest rate decisions next week, so we have to factor those into the Forex trading plan heading into next week. But apart from that, you can see the only other piece of data we have is non-farm payrolls on the Friday. And if we go one more week ahead, you can see that after this week has finished, we go into a week pretty much clear, not this coming week, but the following week, of any real economic data. Gives us a clear run at the currency markets without that volatility risk from the big key events. So when we go through today's Forex trading plan for next week, we just have to keep in mind those 3 interest rate decisions coming out next week. Okay, so let's have a look at the scorecards heading into this week. And for those who are new to the video, any score of +4 means that the market is essentially, in other words, overbought, and usually you get a correction to the downside within the next month. Any score of -4 means the market is more or less oversold. I don't really like the terms oversold and overbought because they're kind of contrarian. I like to trade in the direction of the trend, but you could think of it as being oversold. It means the market usually takes a breather and reverses to the upside somewhat over the next month. The score of 3 is a strong bias to the upside, -3 strong bias to the downside. And if we have a rating of 2, that is a bearish bias down here, -2, and a rating of 2 is a bullish bias. And anything which is between 1 and 0 is generally considered neutral. I don't really have a very strong bias either to the upside or to the downside. Now last week we saw more or less neutrality across the currency pairs heading into FOMC. That happens quite a lot. But coming out of FOMC, you can see the US dollar is the strongest currency going into this week with a rating of +3, so I have a strong bias on the dollar, and this is going to form the bedrock of my Forex trading plan next week. To the downside, we have the New Zealand, which is super weak at -4. I do still like New Zealand shorts, but because it's so weak, just bear in mind that we may see a reversal to the upside in the next few weeks. And as a result, it means I prefer currencies such as the Australian dollar to the downside and possibly even the euro to the downside. This week, perhaps not the euro because we have that interest rate decision on Thursday. So because of that, I would favour New Zealand shorts this week over the euro because the euro might get corrective between Monday and Thursday. But certainly Australian dollar to the downside is my favourite short. And alongside the US dollar, which is my favourite long, I also like pound to the upside. I also somewhat like Swiss franc to the upside because we have a good score of +2 here. However, when we go and look at the individual currencies, you can see when we look a little deeper that this rating of +2 really is based on the relative strength against other currencies as opposed to being very, very strong individually, the currency itself, unlike the dollar, which is individually a strong currency. So to summarize, what I'm looking for going into next week is, first and foremost, I like dollar long plays. These are my top priority going into next week. I will be looking for Australian dollar to the downside as my favorite short, followed by New Zealand dollar to the downside and euro dollar to the downside. I then like to the upside pound Aussie followed by pound New Zealand we're also going to look at. And I also like euro pound to the downside somewhat. Again, that's probably third on my list after Aussie and New Zealand because of the interest rate decision on Thursday out of the EU. I also like Australian franc to the downside, New Zealand franc to the downside, euro franc to the downside we're going to look at today. And also, even though we only really have a +1 rating, it's kind of bullish to neutral, I do still like Aussie yen to the downside, New Zealand yen to the downside, and somewhat euro yen to the downside as well. So those are my favorite plays going into next week, and we're going to look at those in more detail when we look at the currency pairs. But another thing to note here is we also saw a weakening of the Canadian dollar. And when we go and look at crude oil, it does look like crude oil is starting to top out. So although the Canadian dollar has not yet turned negative and is a short, just bear in mind we may be at the top, and I don't think Canadian long plays are especially a good idea going into next week. And I am anticipating a reversal to the downside in both the Canadian dollar and also crude oil. And when that happens, I would be looking to add Canadian shorts to the list, maybe next week or the week after. For those of you who follow this channel on a regular basis, you'll know I'm not in favor of shorting tops or trying to buy bottoms. I prefer to wait for the reversal to happen and then get involved. So don't be surprised to see CAD shorts back on the watch list over the next few weeks. But for now, I'm going to be patient, and I'd much rather focus on the Aussie, New Zealand shorts and also those Euro shorts next week. Okay, so let's have a look at the individual currency, starting with the DXY, and very often these markets align themselves with what we're looking at in the scorecards. However, just like this week, you will see when we go through the individual currencies, it provides us with some more information, what's going on behind the scenes with those scorecards. In terms of the dollar index, this is exactly what the scorecard is showing. There is a bullish bias, a strong bullish bias, and we have rallied to new highs. I am looking for any pullback in the DXY next week for a move into the 97.80, and this move here is what I'm going to be focused on, those long dollar plays. So long dollar setups going into next week are my favorite setups. Next is the euro. And in terms of the euro, we're really just looking here at the opposite of what we just looked at in the DXY. We have this correction, which was noted in last week's video, and that counter trend move has finished. We had a break to the downside, so any pullback in the euro is simply viewed as an opportunity to look for further declines into the 1.10150. So we are seeing weakness here in the euro, just confirming what we looked at in the scorecards. Next is the pound. The pound is somewhat bullish, and you can see it's still technically structured to the upside. As it currently stands, it does look like we may be forming an inverse head and shoulders and coming down into the right shoulder. So I am looking for any break higher in this market. I'm going to be looking first of all up to the previous high here and then onto the 1.3829. So as you can see, the pound is somewhat strong, but it's not as strong as the dollar, and that's why I favor the DXY pairs over the pound pairs next week. Next is the Swiss franc. Now this is where we start to see some additional information, because the Swiss franc is actually currently scoring +2, which means compared to all the other currencies, it's actually fairly strong. However, you can see individually, it's not like we just looked at in the pound or the dollar, where the currency is rallying to the upside. This is actually fairly weak. So if you're going to look at long positions, I would prefer the dollar and I'd prefer the pound long setups over the Swiss franc pairs because of how the Swiss franc individually is structured. So overall, you can see it's actually fairly choppy. I mean, you can take these lows over here, and if anything, you could argue that this market is ranging somewhat. But any pullback in the Swiss franc, don't be surprised to see further declines into the 1.0696. And you may be saying, well, if the Swiss franc declines and sells off, how can you have, for example, Aussie franc going to the downside? Because if you have a slightly weak Swiss franc and a very weak Aussie dollar, you're still going to see the very weak Aussie dollar decline to the downside against the only fairly weak Swiss franc. Makes sense? So it's all relative. So what this is telling us here is to prioritize pound long positions and especially dollar long positions going into next week over Swiss franc long positions. Next is the Japanese yen. Now we have the same information here. The Japanese yen is currently structured to the downside, although it is somewhat corrective. You can see here that this is kind of, technically speaking, this is bearish to neutral, but in terms of the scorecard, it's bullish to neutral. It means relative to the other currencies, it's kind of slightly bullish. So again, the main takeaway of this and looking at the individual currencies here is just to see that, okay, well, the yen is not as strong as the pound, it's not as strong as the dollar, and therefore, if I am going to be going long a currency next week, I would prefer the dollar, then the pound, and then the Swiss franc or the Japanese yen. And this is especially important when you consider the Swiss franc and also the pound are both scored as +2. So how do you differentiate which one is the best? Well, in this case, it would be the pound based on what we're seeing in the individual currencies in the futures markets. Next is the CAD. Now, the CAD actually weakened. You can see the CAD is structured to the upside here, but the Canadian dollar actually weakened. It has a little bit of downside momentum. And I would not be surprised to see the Canadian dollar taking out the lows and continuing down. If that takes place, this will probably put the CAD back on the short watch list, and I'll be looking once again for short setups in the CAD. But as I said, I'm not looking for that next week. I'd like to see it break lower. I'd like to see the CAD weaken some more, and then perhaps in the subsequent weeks we can look at those CAD short positions. So a little bit of patience required on the CAD. Next is the Aussie. Now look at the Aussie compared to, say, the Japanese yen and the Swiss franc, which were also structured to the downside. We have a really nice sell-off followed by a bear flag, and now we're making new lows. We took out the target set here at the 0.7003 last week. And any pullback in this market next week is viewed as an opportunity to look for shorts into the 0.6910. And this is actually my favorite short going into next week. And finally, we have the New Zealand. Now, the New Zealand is very, very weak. It was on the short watch list last week. And we did take out the target at the 0.6662, which was highlighted in last week's video. As we have such strong momentum to the downside, this is suggestive of further declines in the New Zealand. So what I'd like to see is any pullback in this currency, and I'm going to be looking for further declines into the 0.6490. And this, of course, this correction and a weakening would show up in the New Zealand pairs, such as New Zealand dollar to the downside, pound New Zealand to the upside, New Zealand franc to the downside, New Zealand yen to the downside, etc. So alongside Aussie shorts, I do still favor New Zealand shorts as well next week. Okay, so let's move on to the currency pairs themselves, starting with Aussie dollar, which is my favorite short going into next week. Last week, this was a market highlighted as one of the best pairs, and we did come down and take out the target at the 0.7007. Coming into this week, what I'm going to be looking for is any pullback in this market is simply viewed as an opportunity to look for short positions down to the next key of support to the downside, the target set at 0.6933. Now, just bear in mind, we do have that interest rate decision out of Australia on Tuesday morning, the early hours of Tuesday morning. And so what I would prefer to do with all of the Aussie pairs next week is to wait for that interest rate decision. And usually it will do one of two things. It will do something like this. If the market is currently structured to the downside as it is here, we will very often get the market doing nothing. And then on the interest rate decision, you get a spike against the trend, which would be this correction. And then what you want to see is you want to see the market kind of peter out and then start to reverse to the downside. Or if the market corrects into the interest rate decision, look for that break lower on the interest rate decision, and then any correction after that will be the opportunity to look for shorts once again. So regardless of what happens, I am only interested in short positions in Aussie dollar. That would only change on a dramatic rally above the 0.72750. That would be a double bottom reversal. But that seems very unlikely next week. Why? Because inflation in Australia is only running about 3.5% when you consider in the US it's coming up to 7%, in the UK, Canada 5%. And so there is less urgency on the Reserve Bank of Australia to hike, and they have stated in their previous monetary policy reports that they intend to keep interest rates low for a sustained period of time. So I do really like Aussie dollar going into next week, but just bear in mind that interest rate decision on Tuesday morning. Next is New Zealand dollar. New Zealand dollar was highlighted as one of the best shorts last week. We came down, took out the target at the 0.6585. Going into this week, I do really like this market, even though the New Zealand dollar is somewhat oversold. I still like this, and I still think we're coming down, and I have a high conviction target at the 0.6388 as well. So we may be coming down over the next 2 weeks in New Zealand before we form any type of bottom or reversal to the upside. What is really nice about New Zealand is you can see we broke out of this correction with momentum, and this is indicative of further declines to the downside. So I'd like to see a pullback first, and any pullback in this area will be viewed as an opportunity to look for shorts into the 0.6491 and then onto, at some point, either next week or the following week, into the 0.6388. So New Zealand dollar highlighted as one of my favorite opportunities next week. Next is euro dollar. Now, of course, with a stronger US dollar, we had that sell off to the downside. We took out both targets to the downside highlighted in this market. This was a post FOMC opportunity last week. I did say last week, just as I'm saying this week with the Australian interest rate decision, to wait for the Fed meeting on Wednesday and then look to enter this position based on what was said. And of course, the Fed doubled down on their hawkishness. So we saw that sell off to the downside. So going into this week, I do favor further declines in euro dollar. It is highlighted as one of my favorite pairs. Any pullback, any kind of bear flag pattern in this area will be viewed as an opportunity to look further declines into the 1.10650. Next is crude oil. Now, crude oil is technically structured to the upside. We did come and take out the target set last week at the 88,750, and that was pretty much the high of the week in crude oil. Something to remember is that crude oil and the Canadian dollar tend to move together, and we saw a weakening of the Canadian dollar last week, and that's as crude oil is starting to run out of steam. We may come up, there is a little bit more of a gap to the 90.70, but in all honesty, in my opinion, the downside risk in crude oil is greater now than the upside potential. And I would personally prefer to stay away from crude oil long positions as it currently stands. And because the Canadian dollar is slightly bullish to neutral but weakening, you can see it doesn't even make any of the currency pairs anyway. So I wouldn't actually be surprised to see crude oil topping out in the near term and seeing the Canadian dollar turn into a decent short over the next few weeks. Next is pound Aussie. Now, pound Aussie is structured to the upside, and you can see, if I just change this back to the 4 hours, you can see that pound Aussie has broken out of this near-term correction, and we've broken out with some nice momentum. So we do have both an Australian interest rate decision and a pound interest rate decision next week. So what I would like to see here is, having broken out of this near-term correction, is on Tuesday, if we get the Australian interest rate decision and for whatever reason we see the market pulling back, and then between Tuesday into Thursday, I'm going to be looking for this move higher. If you go long somewhere in this area after the interest rate decision out of Australia Tuesday morning, and the market rallies into the interest rate decision on Thursday, there's nothing wrong with booking profits on pound Aussie before the UK interest rate decision, rather than risking, say, this much to the target and have it move in the opposite direction on the interest rate decision. So I do like pound Aussie to the upside, but you kind of had to thread the needle a little bit between the Australian interest rate decision on Tuesday and the UK interest rate decision on Thursday. Next is pound New Zealand. Now with pound New Zealand, we only have the interest rate decision on Thursday out of the UK. So what I would like to see here is between Monday and the interest rate decision, any pullback in this market, any bull flag would be viewed as an opportunity to look further advances into the 2.0611, or if we get a nice rally into the interest rate decision, you can look again at booking profits before the interest rate decision. Next is euro pound. Now this is not highlighted as one of the best plays next week. We do have the interest rate decision on Thursday out of Europe and also the UK, so it's on the same day. So I think what we're likely to see in this market is not much happen until those interest rate decisions, and then we're probably going to get quite volatile moves sort of on Thursday. But any pullback in this area, if the market corrects all week and then on Thursday we get a sell-off, I am going to be looking at further declines into the 0.8284. I prefer pound New Zealand and pound Aussie, and this is not highlighted as one of my favorite ones, although euro pound to the downside is viable based on what we're looking at in the scorecards. Next is Aussie franc. Aussie franc was a market highlighted to the downside last week. This was markets I actually shorted. I tweeted out right after FOMC. I have initiated shorts in Aussie franc and Aussie yen into the end of the week, and both of those paid very nicely. Coming into this week, any pullback in this market is going to be viewed as an opportunity to look further declines into the 0.6416. Remember, we have the interest rate decision on Tuesday, and just as we discussed with Aussie US dollar, I am going to be looking to play this the same way. So pull back into the interest rate decision, and then you get the break to the downside. Look for further advances to the downside, or further declines, I should say. Or if the market just does nothing and then spikes on the interest rate decision on Tuesday, look for the market to roll over and fade to the downside. Next is New Zealand Swiss franc. New Zealand Swiss franc came and took out the high conviction target that I've had from previous videos, 0.60870. Coming into this week, I do still like shorts to the downside. Any pullback in this market, although I prefer the dollar pairs, any pullback in this market is still viewed as an opportunity to look for further declines down to the 0.6033. Next is euro franc. Not one of my favorite plays, but is still a viable play. We've already taken out the target at the 1.0312 and we bounced from this area. So any breakdown in this market will be viewed as an opportunity to look for the 1.0312 once again. And if we can break through here, the next target to the downside, although it may take a couple of weeks because there's a bit of a gap here, is going to be, if we can break through here, down at the 1.0234. So I do favour Euro franc to the downside, but I prefer Aussie franc to the downside and New Zealand franc to the downside instead of Euro franc. And finally, we have the yen pairs. Aussie yen to the downside, as I said, I tweeted out after FOMC, this was the market I shorted after that based on what was said in the Fed meeting. Into the end of the week, we did have a really nice sell-off. Any pullback going into this week is viewed as an opportunity to once again look for bearish reversals. Down to the next Kiev support to the downside and the target set at the 79.97. Again, interest rate decision out of Australia, I've already explained with Aussie franc and Aussie dollar how I'd like to play the Aussie pairs. New Zealand yen, I do have a high conviction target at the 74.83. So very simply put, any pullback in this market next week is viewed as an opportunity to look for bearish reversals or short positions into the 74.83. If we get a breakthrough here, I would be looking down towards 73.79, but who knows if we come down to this area because the New Zealand is rating at -4. It is suggesting we may get a pullback at some point. However, I do think the 74.83 is a high probability target in this market. And finally, Euro yen. So I don't favour it as much as I like Aussie yen and New Zealand yen. However, you can see we are correcting in this market. So very simply put, any pullback in this market is still viewed as an opportunity to look for bearish reversals down towards the next Kiev support to the downside, which in this case is the 127.31. So I do prefer Aussie yen and New Zealand yen, but Euro yen is also viable. We do have the interest rate decision on Thursday out of the EU. So I would really like to see this moving into that interest rate decision and then be out of this before that interest rate decision takes place later in the week. Okay, so moving on to stocks, gold, silver, and Bitcoin. Now, in last week's video, I was bearish on stocks and we came down, took out the targets, and you can see I have not updated this chart. There's a very good reason for this. This week, the stock market analysis is going to be patience. It's going to be wait and see, because although last week we did come down and we took out the targets, if you come look at the Nasdaq, we took out the target set. If you come look at the Dow Jones, we took out the target set. If you look at the Russell, we took out the target to the downside, and this is where we're currently sitting. Going into this week, we have a special set of circumstances. We have had a big sell-off to the downside, and we are also still technically bearish in stocks. The reason, however, I am taking a patience and a wait-and-see approach to this is because I do believe we are at potentially the lows of this near-term correction in the stock market. I did tweet out on the 24th of January when we hit the lows down here in the Nasdaq that I did believe there's a very good chance this is the low. And if this is the low in the Nasdaq, and if this is the low in the SPX, and if this is the low in the Dow Jones, and if this is the low in the Russell, although I must say the Russell looks a little bit more bearish than the other markets here. But if these are in fact the lows, then any short positions in this area are going to be very risky, because we also have heightened volatility, and so any bounces could be very volatile. And I don't think at this point it's a great idea to be shorting into these bounces here. What I would like to see in the stock market, if this really is going to be the low of the SPX before we start to rally, and don't forget, markets are a discounting mechanism. So we had that sell-off into FOMC, we then get a hawkish Fed, and the opposite happens, we start to bounce to the upside. That is what people mean when they say markets are discounting mechanisms. They're forwards looking. So this sell-off into FOMC was forwards looking into that event. And then when the event takes place, very often you get the reverse happening. So I tweeted out also on January the 11th that when the market was coming down, that yes, this was pretty volatile. However, the markets were not actually crashing. They're only correcting as it currently stands. And my base case here is for, it doesn't have to be this exact pip or point, but that these are the lows in the stock markets and this correction is now over. So if I am going to get bullish on stocks once again, what I would like to see is, I would like to see a break of this high over here, and I would like to see the stock market doing this next week. I'd like to see a rally up into this area, and that would set up the opportunity for further advances to the upside. In the stock market, I'll reassess these and move these levels around, and that would likely take place in the Nasdaq as well, the Dow Jones and the Russell. So to summarize where I currently stand on stocks, the market as it currently stands is still correcting, although this is volatile. This, in my opinion, has a very good chance of being the low in the SPX and also the Nasdaq, Dow Jones and the other stock markets. It has not yet reversed, so I don't want to be catching a falling knife and buying into these. I would much rather wait for it to reverse higher and then trade in that direction then to get bullish on the stock market. And as a result of that, I would like to wait an additional week before forming a bullish bias on stocks once again. Now, I noted that this sell-off in the stock market as it currently stands is a correction, not a crash. However, if markets at this point fail to make new highs and we get a failure to make a high up in this area and then we come down and take out this level over here, that could very well initiate a crash in stock markets. And that would be where we could technically consider what is currently a corrective sell-off to be the start of a new trend to the downside, and that would initiate a full-on bear market, technically speaking, in the SPX, for example. Now, I know that a bear market is 20% from the highs, but I actually think there are better ways of identifying bear markets, and technically speaking, this is not yet a bear market. This is a sharp sell-off, and if you go and look at the bigger picture, say the monthly, you can see very often you get these sell-offs in the monthly, followed by the rally. Bigger sell-off here, followed by a rally. Sell-off in the monthly, followed by a rally. And this just underscores the fact that, as it currently stands, this is not a crash. This is just a near-term correction. So patience on all of the stock markets, in my opinion, because this is kind of in no man's land. It's technically bearish, but we could be at the point where we start to bounce. So I'd rather wait an additional week before forming a stronger bias one way or the other on stocks. If we go and have a look at the Nifty, you can see the Nifty as an indication of what could be coming next in the US stock market is not structured to the downside. If in fact what we're forming here is an inverse head and shoulders, and I would be looking, if US stocks are going to bounce, I would also be looking for further advances in the Nifty up to the previous high and then on to the 18,594.90. Okay, so wrapping up the video with gold, silver and Bitcoin, starting with gold. Gold actually had a major breakout to the upside, which we've been looking at in the previous weekly Forex Forecast videos. However, last week, FOMC broke the back of that breakout, and that breakout has now failed to the upside. And gold overall is kind of neutral, but it's at a risk of a much bigger decline now with that failed breakout. Why? Because I noted in previous videos how we had this inverse head and shoulders breaking over here to the upside, which is, of course is bullish. And we also have at the same time the opposite here. We have a head and shoulders, which is a bearish pattern to the downside. Now, the fact that this breakout above these areas over here failed last week is pointing towards a potential failure over in this area to make a new high. And if that's the case, and we are heading down towards this low in gold, any break of this low could very well see quite a bit of capitulation to the downside, because all of these traders who are long in this area are likely placing stops here. And if we break the 1759.44 and we break this low, we could very well see gold selling off quite hard to the downside. I said in previous videos this is likely to explode one way or the other, and as it stands, this has failed to really explode to the upside after that major breakout. So the downside risk in gold is now elevated, and also with a stronger dollar, this is going to add downward pressure on gold. So very simply put, going into next week, because of that failed breakout, any pullback in gold as it currently stands is viewed as an opportunity to look for further declines. And I'm going to be looking for bearish reversals in this market down to the 1759.44. Next is silver. Silver also had a very big sell-off to the downside last week and reversed. And as it has done pretty much all of last year, the stronger dollar is really weighing in on those breakouts to the upside in gold and silver. As it stands, while the dollar is still strong, I do favor shorts in this market now. Any pullback in this market is simply viewed as it currently stands as an opportunity to look for shorts into the 25.47. And last but not least, we have Bitcoin. I was bearish last week on Bitcoin, and we've taken out target after target to the downside in this market, and I am still bearish. I'm viewing this currently as a near-term correction to the upside, a bear flag type scenario, if you will. Any breakout to the downside in Bitcoin is viewed as an opportunity to look for shorts into the 32112. And with the dollar breaking stronger last week, that's going to add additional pressure to Bitcoin to the downside since it's priced here in dollars. So that is it for me for this week, guys. I do favor dollar strength plays going into next week. I like Aussie to the downside, New Zealand to the downside. And I do think we could be seeing a bottom here in the stock markets, although I don't want to step in and catch a falling knife. I'd rather wait to next week to see if we can reverse higher from where we are. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care, and don't forget to trade safely.